So about a year ago, I made a video called What is the IRS Fresh Start Program? That's not what you think it is. You can see it right here. You can't click this. You'd have to like search it in YouTube. This is not clickable, but I'm just showing you what the video looks like. Just explaining what the Fresh Start Program is. It's not synonymous with the Offer and Compromise Program, right? Blah, blah, blah. Watch that video if you want more information. But recently, actually just yesterday on this video, Acoustic Guitar Forest 2542 commented, if you own a home, you are automatically disqualified from the Fresh Start Program, is what he's saying, because they want you to take a home equity loan out even if you can't make payments on the home equity loan. And Acoustic Guitar Forest, I think you're on the right track here. I know what you mean, okay, but I want to kind of flesh it out for other folks here, what you mean and what the rules are. So first of all, Acoustic Guitar Forest, you're talking about the Offer and Compromise, right? Which I get it. Lots of people think Offer and Compromise is synonymous with Fresh Start Program, thanks to all the wonderful television and radio ads from big 1-800 tax relief companies. Anyway, okay, it is true that if you will not qualify for an Offer and Compromise if the includable equity in your home for Offer and Compromise purposes exceeds your tax debt. Whether or not you qualify to take equity out of your home, whether you can qualify for such a loan, and regardless of whether you can actually make payments, okay? That is true. Now, there's a little nuance here, okay? Because you can have $200,000 of equity in your home and still qualify for a doubtless collectability Offer and Compromise on $100,000 of tax debt. It all depends on how the numbers play out. Let's take two taxpayers. Taxpayer 1 owes $100,000 of debt to the IRS. They have no disposable income for Offer and Compromise purposes, and the only asset they have is their home, which is worth $400,000, and they owe $200,000 on the mortgage. Okay, so we're going to talk about this scenario. Do they qualify? Do they not qualify? Scenario number 2, taxpayer, same thing, no disposable income for Offer and Compromise purposes. They also have $200,000 of equity in their home, but their home is worth $1 million, and they have an $800,000 mortgage on it. So they also have $200,000 of equity in their home. On paper, you might think, well, there's no difference here. They both have $200,000 of equity in their home, and they owe the IRS $100,000. Neither one would qualify for an Offer and Compromise. Wrong. One of these taxpayers actually qualifies for an Offer and Compromise just based on the assumptions I've provided. Do you know which one? It's the second one, believe it or not. Now, many people might think it's the first one because, they only have a $400,000 home, while the other has a $1 million home. They must be, this other one is they were able to afford $1 million home. They must be in a better position. I don't know, whatever the logic is there, right? Whether right or wrong, the second one would qualify for an Offer and Compromise and the first one wouldn't. Why? Because for Offer and Compromise purposes, okay, you actually take a 20% haircut off of the fair market value of your home. And then you subtract the mortgage from that, and that's your includable equity for Offer and Compromise purposes. Yes, you can make it more, granular, right? If there's a lot of repairs, right, that need to be done in your home, you can factor that in as well. But for most folks, that's the math. So think about the math with that first taxpayer with the $400,000 home. $400,000, 20% haircut, right? So $400,000 times 80%, that's $320,000. Less their $200,000 mortgage, that's $120,000. That's more than their $100,000 of tax debt. Now let's take the second taxpayer, right? $1 million home. $1 million home with an $800,000 mortgage. $1 million home times 20%, $1 million home times 80% is $800,000. Minus their $800,000 mortgage, that's nada, zip, zilch. They have no includable equity for Offer and Compromise purposes. They would qualify for an Offer and Compromise under doubtless to collectability, assuming that home is their only asset and that they have no disposable income for Offer and Compromise purposes, and there's no other issues like dissipated assets and things like that. Okay, this is kind of surprising. It might be counterintuitive. It might not even seem fair, but that's the way it is. Second thing I want to say about home equity and tax resolution. That's Offer and Compromise. What I talked about is Offer and Compromise. Also want to talk about a partial payment installment agreement. Okay? With a partial payment installment agreement, you can have that equity in your home. But if you can show, based on loan denial letters from reputable lending institutions, at least a couple of them, that you do not qualify to take cash out of your home. You don't qualify for a HELOC. You don't qualify for cash out refi. You cannot convert any of your home equity into cash at this time. That is valid for partial payment installment agreement. You could still qualify for a partial payment installment agreement. So taxpayer number, to the first taxpayer there, right, if they can get loan denial letters saying they can't take the equity out, right, or in Acoustic Guitar's words, even if you can't make payments on the home equity loan, the IRS would essentially ignore the equity in their home for partial payment installment agreement purposes, and they could probably pay, $50 a month on their debt until it drops off. Right, $100,000 of debt. Let's say it drops off in 3 years, thanks to the IRS 10-year collection statute. So that's $50 a month. So that's $50 a month times 3 years. What is that? $1,800. Right? Did I do that right? Yeah, $1,800, I think. Right, so they're paying $1,800 on that PPIA on $100,000 worth of tax debt. That's a great deal too, folks. So don't discount that PPIA. Don't sleep on that PPIA. I actually have my video on the PPIA right up here if you want to check that one out. I talk about home equity in that video as well. Anyway, folks, thanks so much for watching, and keep the comments coming, and I'll see you in the next video. Bye-bye.